Well, this week has been a little bit of a roller coaster week with the stock market, anyways. We had some good economic numbers out, especially concerning inflation. Inflation is totally contained here in the U.S., so both on the consumer level and on the producer level. So what that does is it allows the Fed freedom to do what it wants, so it can continue to keep pressure on interest rates to stay low. And that was their plan anyways. But without inflation, they don't have to worry about the other mandate they have, and that is to control price inflation. We had some economic numbers out of China. Their CPI was up 3.6% for the first quarter, which is higher than it was in the last quarter of last year. Their car sales month over month increased, and their GDP number came out this morning at 8.1% growth. Now that's a little less than expected at 8.3% growth, their GDP for the first quarter. And that is more evidence that they have been able to slow down their economy. And I'm suggesting that because of this, their stock market might just be ready to rally. It hasn't done that 2+ years. It really hasn't. But the reason why I'm thinking this is that the Chinese government has been successful in taming some inflation, even though it perked up last month. Taming the inflation, that runaway inflation they appeared to be having last year and the year before. And they might be ready to do a stimulus of some kind, some of their own QE, quantitative easing. And that probably is likely to take the form of infrastructure spending. Mind you, infrastructure spending was up 19% for the first quarter, but that was down from 22% from the quarter before. And remember, they have lots of cash. It looks like they're managing this soft landing, and it looks like they can spark that economy anytime they feel like it. Meanwhile, worries over Europe did pop up this week, and that put some downward pressure on our market in the middle of the week. Interest rates are rising in Spain, almost approaching, I think, 6%, which is kind of a tipping point for them. Italy and Germany also issued government bonds besides Spain. We're talking about government bonds. And I find it very interesting that Italy's issuance of bonds, government bonds, went much better than Germany's issuance of government bonds. In other words, interest rates were lower in Italy than they were in Germany. That makes absolutely no sense from an economic point of view, because Germany's economy is a lot stronger, and they have much less debt than Italy. But it does make perfect sense if you think about intervention by governments buying bonds, and that's obviously what's happening. The EU, the ECB, or the IMF are entering the market trying to hold interest rates down. So, and that looks like it was successful in Italy's issuance of bonds. Maybe they're not doing so well with the Spain issuance. Remember, the ECB increased their quote-unquote firewall to 700 billion euros, so close to $1 trillion, to keep interest rates under control in that part of the world. So I don't think you should fight them on this, because it's like fighting our Federal Reserve. Don't fight the Fed. That's an old saying. Don't fight them. So that's what's happening in our market. We did have a decent correction, about 4.25%, after the market fell for like 6 days in a row, and then half of that was retraced here in the last couple of days. Today the market is kind of flattish, or actually down a little bit this morning here about 7 o'clock. So we'll see how today goes. But that's what's going on. I think you kind of stay with your market, keep your stops in, but there's no reason to panic, not yet. But remember, we're entering earnings season. We are getting some pretty good numbers. Got decent numbers out of COA, good numbers out of Google, two big bellwether kind of stocks, and we're also entering. Remember the old saying, "Go away in May." Here it is, April, whatever, 10th or 12th. So we're in the middle of April. So you got to be concerned with the cyclical pattern of the market. Summer usually has a correction. We had a decent one last year. Probably have an okay correction again this year.
The Invest Talk Update is a monthly briefing that gives you a snapshot of the past month's market along with other useful perspective and information. You'll see important articles like Protecting Your Investments Against Scam Artists, excerpts from Steve's book, links to the month's Invest Talk talking points, plus news of upcoming Invest Talk events in your area. And it comes free each month to your email box. To get your subscription, just go to investtalk.com and click on the icon at the top of the page.